can't stop taking punches right now. Bitcoin, along with the rest of the crypto space, is just bloody, taking punches left and right. You've been pulling back in a nasty manner today. If you look at my tickers, everything is red in the crypto space. Not even Polygon or Solana or Polkadot. None of the more bullish cryptos can seem to escape this gravitational pull. And we are starting to see the makings of a crash setup. This is what we're going to go over in my video today. This is what a crash may look like in Bitcoin as we see it develop. We've had a couple of supports break already. We've actually gone lower than our December 3rd low, which was right around 42,000. And we're sitting at about, what, 41,665. So any bullish, immediate bullishness has been quelled. We're looking at this as being a 1-2. That is dead at the moment. So there is a crash warning. We haven't broken our 39.6 number that I've been citing all this time yet, but there is a setup coming. No time to panic though. So we're going to kind of go through the anatomy of what a crash in Bitcoin would look like. So the first thing I'm going to do is I'm going to pull up our long-term chart. I just presented this a few days ago where we had a bunch of patterns. There's a lot of clutter on the chart, but truth be told, the purple pattern is more or less dead. We're looking at a nested 1-2-1-2 setup. We had some hard parameters that would either validate or invalidate or whatever. I said that it just looking more and more likely that our green pattern would be more likely, and our green pattern would have us being in a ending diagonal for a bigger fifth wave. That's the green pattern. Regardless, the problem with this green diagonal pattern is that diagonals look corrective. They consist of ABC corrective waves, so it's not reliable at all. It would not be a trustworthy indicator of bullish sentiment at all. They look just like any kind of upward corrective bounce. So therefore, the green pattern is more or less the operational pattern at the moment, but it's hanging on by a thread. And if I see more of a development in the red pattern, that's going to become my primary. Now, before we get into the details of that, where would our red C wave take us? Well, if we look at this chart, our third wave top, major third wave, was in the spring of 2021. We were calling this the entire fourth wave, but the red pattern has this entire thing being an A wave, and then our bounce being a B wave fake out rally. So corrective bounce. Our C wave, based on our fibs, would fall to somewhere around the 0.764 extension of our original 1-2 down here. That would put us around 24,431, 24,400, somewhere in that range. That's what this red line is. So that is just based on pure standard Fibonacci pinball levels. That would be where our C wave would take us. So pretty ugly scenario, however you cut it. Now, to make this crash setup more clear, I've set up this demo chart. So this is still the logarithmic chart. I've cut this down to the 4-hour interval just to give us a more close-up, intimate view. And you can see that major third wave top in purple over here that happened in spring of 2021 for Bitcoin. And of course, we were looking at this as a fourth wave down, but since we're looking at the anatomy of a potential crash in our potential red pattern, we're looking at this entire thing as an A wave down. And then now you can see internally why I believe this is corrective. So if that's our A wave down, this could easily be a 3-wave bounce up. So this could be an A, B, C for our A wave, A, B, C for our B wave, and then our C wave does actually look impulsive. You could count this as a 1-2 extended third wave, fourth wave, and a small truncated fifth wave. Any way you cut it, does look very corrective. Again, it looks like a zigzag going up. And I've been highlighting this, harping on this for a couple of months now, that it does look corrective. And in order for us to have a crash setup in place, we need to have the right structures for the C wave. So the rules of C waves in Elliott wave analysis is that a C wave must be in the form of a 5-wave structure. So it would either be an impulsive 5-wave down or an ending diagonal. In this case, it could be either. So not only does your C wave have to be 5 waves down, needs to spike below support, it also needs to its subwaves also have to be in the form of 5 waves. So your 1, 3, and your 5, those waves within that C wave must also be impulsive. So what we're looking at here is very likely the beginning of a C wave. So this is a 5-wave structure down. I'm calling this a wave 1 within a larger C wave that may already be in progress right now. If you remember on early November, we peaked in Bitcoin, we pulled back, and we had a colossal crash, really scary one-day pullback on December 3rd. This was a three-wave crash at the time. It looked like a clean ABC. So, you know, we were catching our breaths, relaxing, just letting loose a bit because we were out of the woods at least for a little while. Well, ever since then, our bounce does look like a fourth wave. It has retraced a bit deeply for a standard impulse. So I would probably be confident calling this maybe an ending diagonal situation, something like that, just because of how deeply the fourth wave retraced. However, our fourth wave didn't quite overlap the first wave. So somewhere in between, we could call this an impulse. Regardless, you got a first wave, second wave, third wave, fourth wave, and it looks like we're completing an impulsive fifth wave within the larger wave one. So we're already hitting all the standard things you're looking for a C wave down. This is looking pretty scary at the moment. When we look at our short-term chart, this is of course the 2-hour view linear chart. Things are looking the same. You still see your one, your two, your third wave down, and then a fourth wave, which is very long and sideways. That's what you expect based on the textbook. Fourth waves are long, they're slow, and they're grindy. And we're in the middle of our fifth wave down. I'd like to also point out, I have the MACD showing here. Our biggest spike down in the MACD was on that spike down on the third wave. This is what you expect in an impulsive wave. Usually, your third wave is usually the strongest. You have the most bearish sentiment, and then you see a bit of a divergence as you have your fifth wave. So you'll hit a lower low in price, but your MACD won't go as low. And you'll see this same pattern at whatever degree you look at, whether it's the daily chart, whether it's the 15-minute chart. You typically see the third wave within a C wave or an impulse having the highest MACD, absolute value, either the most oversold or overbought, whatever it is. So far, it is fitting the descriptions that you'd expect for an impulsive wave. So what are we looking at here? If this fifth wave continues based on the 1-2 here and some standard Fibonacci targets down here, you'd expect us to land somewhere between the 1.618 and the 2.0 extensions. That's what this purple box here is. Again, this is the linear chart. So that is projecting us somewhere between 37,870 and 32,768. Those are the two levels that I'd be looking at. So I would fully expect this first wave impulse to complete, and then a nice second wave bounce might give you an exit point. But before I touch on that, there is another more bearish scenario, and we don't always get what we want. Very likely we're going to have a second wave bounce just because you need to reset the sentiment, the bearish sentiment, before we crash harder. But sometimes you break right down. So if we break down through this box, it's time to bail. So that's what my backup plan is. If we break down, I actually have an alert set at 35,920. This counts a bit differently on the logarithmic chart, which we'll look at again in a second. But if it breaks that, very good chance I'm going to start unloading my positions right away, because you don't know how quickly this thing could just fall off a cliff. It is crypto, it's very volatile, things can happen. However, this is a little less likely at the moment. More likely we'll have a bounce, and wave twos are corrective. So we would expect a zigzag kind of wave going up. So maybe an A wave, a B wave, and a C wave. If you're trying to unload, there are a couple of approaches you could take. You could wait to get to this A wave, then you can unload there, maybe unload half of your position there, wait for a B wave, bounce back down, and then you have a C wave up. That could be the point of gentleman's exit, as we like to call it in the trading world. It's a way to gracefully exit without completely getting destroyed in terms of profit and losses. How does this invalidate? Because like I said, I am speaking like the red pattern is the primary pattern. It's not yet, but we're very close to it. This breaks if we see a 5-wave impulse up, ideally beyond the previous peak of Bitcoin. So we topped around $68,000. So if we see a 1, 2, 3, 4, 5 wave structure up, then this red pattern is more or less dead. We'll have other alternates. I'm going to shift back to our long-term pattern again, just to clarify this. Again, the calculations are a little bit different here. I would expect our fifth wave, based on the log chart, to end somewhere between 40,800 and 30,800. The targets are a little bit higher up. So you can see my orange alert line. It's still set as is. You do you. If we see this breakdown, it's time to get out, in my personal opinion. Again, if you're a long-term investor, if you bought Bitcoin when it was below 10,000, you might prefer to hodl through this whole thing. Like I said, that 24,000 number still looms down below. If I have to make a projection, wave twos usually retrace quite a bit. Again, in corrective waves, you have a lot of whipsaw. So I wouldn't be surprised if we retrace 61.8% of our wave one down on this wave two bounce. So that could put us close to the $60,000 mark, something like that, before we have our final crash. Now, based on that projection, let me see, I put a 50% retrace here, right? So let's say we do a We have a 61% retrace off of wherever our bottom of the fifth wave is. Can adjust this. So if that's the case, that would put us around what, $56,000, somewhere in that range. We'd project somewhere down between probably, yeah, right around 24,000. That'll be the 1.618 extension. Sometimes corrective waves truncate. So I don't see us going any lower than that, but based on standard Fibonacci extensions, you could say as low as 22,000, maybe even 19,500. So any way you cut it, it's going to look pretty bloody. So remember, stay calm, have a plan. You should start thinking about how to exit your positions if you're planning to, whether you're going to dump everything, unload parts of it as you go, or just hodl through the whole thing. It's up to you because only you know your strategy. Ethereum has a similar setup, so I may be going over that in a separate video, but we're going to keep an eye on this. Another opportunity, though, wherever there's something bearish happening, there's often a silver lining, and this point may be a good point for shorting. So you may be asking, what do you mean shorting cryptos? How do you do that? If you've heard of the BITO ETF, it's the Bitcoin something ETF. I can't remember the name of it. It does have options. If we do get this corrective bounce, very likely I'll be taking a short position, buy some puts on that put options. So I'll definitely be covering that in a video if we get to that point. But until then, know your strategy, know your exit plan, and don't forget to subscribe because I'll keep you posted on how to navigate through the treacherous situation we're in right now. And if you enjoyed my video, don't forget to like. Until next time, thank you for watching and happy trading.